Okay, let's jump right in. I saw this stat, and it really caught my eye. 39% of household assets in the U.S. are in equities. Okay, pretty high.
Yeah, that sounds about right for the U.S.
But then, get this, Sweden, just over 10 million people, right?
Yeah.
Their figure is 36%.
Wow, 36%. That's incredibly close to the U.S. figure.
Exactly. How does a country that size have such strong capital markets, such high retail investment? It really seems like a bright spot in Europe.
It really does. And our source for this deep dive, actually a Bloomberg television piece, picks up right on that contrast.
Oh, okay.
So our mission here is really to unpack that. What are the unique factors driving Sweden's success? Because like you said, its market looks in some ways more like the U.S. than its neighbors.
Right. And it's not just the overall percentage, is it? It's how many people are actually in the market. Apparently, something like 90% of Swedes' savings are in financial assets. 90%.
That's got to be the highest in Europe, surely.
It is. Most invested population in Europe. And crucially, a lot of them own stocks directly.
Okay, so not just funds, but individual company shares.
Yeah, which creates this real economic alignment, as the video puts it. It's not just institutions. It's everyday people having a stake.
Which suggests maybe a different level of financial understanding or trust.
Could be. It means savings aren't just sitting there. They're working, fueling growth.
Yeah.
It feels dynamic.
That broad participation is definitely key. And think about this, connecting to the infrastructure NASDAQ, their European HQ is in Stockholm.
Right, I saw that.
And their Nordic team, about 800 people, isn't that much smaller than their New York operation, which is around 1,000.
Wow, 800 versus 1,000 for Sweden versus the U.S.?
Exactly. It just underlines how active that market is.
Yeah, that NASDAQ stat really does put things in perspective. Okay, but here's where it gets maybe even more surprising. IPOs.
Ah, the initial public offerings, yes.
Between 2013 and 2024, Sweden had more IPOs than Italy, France, or Germany.
More than those three. Combined or individually.
Individually, but still. It was second only to the UK and Europe.
That is wild. Considering the size of those economies, Italy, France, Germany.
I know.
It's remarkable. No, the total market value, the capitalization of Nordic-listed companies is about $2 trillion.
Okay.
Which, yes, is way smaller than the U.S. NASDAQ alone is maybe $30 trillion. But the activity, the number of new companies coming to market in Sweden.
That's the key point. The liquidity and dynamism.
Precisely. The video says Sweden had more IPOs than many European countries combined. That's the lifeblood. It signals a healthy environment for entrepreneurs.
And this isn't just happening by chance, right? There are policies behind this.
Oh, absolutely. The video gets into some specifics.
Okay, spill the tea. What are they doing right policy-wise?
Well, a few things. For small business owners, there are tax incentives, like a 20% tax on dividends, but with something called a return allowance.
Return allowance. What's that?
It basically lets entrepreneurs reinvest a chunk of profit back into the business before that dividend tax hits, encourages growth directly.
Smart.
Then there's this escape system, they call it. Lowers the cost of capital, makes long-term investing attractive because the tax on those savings is effectively low.
And didn't they get rid of some taxes too?
They did. No inheritance tax, no gift tax, and importantly, no wealth tax.
Wow, no wealth tax. That's a big difference from some other European countries.
It is. But maybe the biggest policy driver mentioned is the IISC.
IISC.
Investment Savings Account. Since 2012, here's the kicker. 2.5% of every employee's wages automatically go into funds in their name.
Automatically, just taken out and invested.
Yep. And the tax on those funds, just 1% annually on the value. No capital gains tax when you sell.
1%. No capital gains.
Correct. The video really flags this as a massive driver of market liquidity and participation since 2012. It makes investing almost frictionless.
Automatic low tax.
Yeah.
Yeah, I can see how that would be a game changer. Makes it super easy for everyone to get involved.
Exactly.
But surely it's not just policies enacted since 2012. There has to be something deeper, cultural, historical.
Absolutely. You can't just flip a switch. The video brings up investor AB and the Wallenberg family.
Ah, the Wallenbergs. A huge name in Sweden.
Huge is an understatement. Back in the 70s, their companies employed 40% of Sweden's industrial workforce.
40%.
And accounted for 40% of the Stockholm stock market cap.
Wow. That's foundational influence.
Precisely. And that likely fed into what the video calls a positive flywheel effect.
Meaning?
Well, you might work for Ericsson, say, and also own shares in Ericsson via investor AB or directly, creates engagement, alignment.
Right. You're invested literally in your employer or major national companies.
And get this stat, investor AB alone has 650,000 shareholders.
In a country of 10 million.
Yeah. That shows incredibly broad participation. The video suggests this has dual benefits: social coherence employees as owners, and economic efficiency capital flows to business.
Interesting. Sort of a shared prosperity idea baked in.
That seems to be part of the narrative. And another crucial piece mentioned is the strong social safety net.
How does that fit in?
Well, if you have good social security, unemployment benefits, health care, maybe you feel more secure taking risks.
Ah, okay. Like investing savings feels less scary, or maybe starting a business.
Potentially, yes, both in savings and career choices. Add in a good education system, general financial stability. It all builds this investment-friendly culture over time.
So it's this mix. Smart policies, but also this deep history with major industrial players, broad ownership, and a safety net cushioning risk.
That seems to be the picture painted.
Okay, so how does this then translate into Sweden's reputation for innovation? Because they punch way above their weight there too, right? IKEA, Spotify.
That's a crucial link the video makes. Sweden consistently ranks near the very top globally for innovation.
Like number 2.
Number 2 among high-income countries, according to WIPO, yeah. Just behind Switzerland, ahead of the U.S.
Ahead of the U.S., wow.
And you mentioned the famous brands IKEA, H&M, Ericsson, and Volvo historically, and now Spotify, Klarna. Major tech successes.
Right, and they produce a lot of unicorns, billion-dollar startups per capita too.
More than anywhere else in Europe, except Estonia, apparently.
Unicorns per capita. Another one of those stats that makes you pause.
It really does. The video even interviews a founder from a startup called Proto. Students who saw how hard financing was across Europe, even in Sweden sometimes. And it notes Swedish banks are actually quite active in promoting financial literacy, encouraging investment from a young age.
So it starts early.
Seems so. There's also mention of this nation of engineers mindset, a cultural openness to tech, to building things.
Nation of engineers, I like that phrase.
It fits, doesn't it? And they point to a government initiative back in the 90s, bring a computer into every home.
Really? In the early 90s?
Yeah, early to mid-90s, an example of long-term thinking supporting tech adoption way back then.
That is forward thinking.
But there's a flip side. The video notes Swedish startups often have to prove profitability and global potential earlier than U.S. ones.
Why is that? Smaller home market.
It's exactly. Smaller domestic market. And they don't have quite the same access to those absolutely massive pools of venture capital you see in the U.S. They need to think global, think profit sooner.
Makes sense. Go international or go home, basically. So the video draws comparisons with the rest of Europe and the U.S. too.
It does, and it really highlights Sweden's outlier status in some ways. It brings up Mario Draghi's big report on European competitiveness.
Ah, yes, the Draghi report. What did it say relevant here?
A key point was Europe lagging the U.S., especially in tech growth, partly because of weaker capital support systems. Not enough deep-pocketed investors, maybe.
Okay.
And Henry McVeigh from KKR makes the point that European stock markets, as a percentage of GDP, are about a third the size of the U.S. market.
A third? Wow.
Yeah, reflecting that historical reliance on banks for funding rather than markets and securitization.
So businesses went to the bank for a loan rather than issuing shares or bonds as much.
Traditionally, yes, much more so than in the U.S. Securitization, bundling loans into securities, look common historically in Europe.
And the Draghi report called for more IPOs, more investors.
Pretty much. A deeper pool of angel investors, more European IPOs, exactly the areas where Sweden seems to be doing relatively well.
Interesting.
And while Europe apparently has a similar number of VC firms per capita as the U.S., it lacks those giant globe-spanning funds.
Which means?
Often, successful European startups end up getting bought by U.S. companies instead of scaling up to become global giants themselves from a European base.
Ah, the exit path leads across the Atlantic.
Frequently. And the video contrasts this with Investor AB's approach very long-term. An exit isn't really part of the initial plan. It's about building companies for the long haul, which is different from a typical U.S. private equity cycle.
Right. The buy, grow, sell model isn't their primary focus.
Seems not.
So this Swedish example Is it replicable? Are other countries trying to copy it?
Well, the video suggests there's definitely high interest from other European countries. They're looking at Sweden's household investment levels, their pension reforms.
Trying to figure out the secret sauce.
Exactly, but the Swedish view presented is essentially that there is no single secret sauce. It's a whole system.
Combination of factors working together.
Right. It's the policies, the history, the culture, the safety net. It all interacts, not just one simple thing you can copy and paste.
So no silver bullet. It's more like an ecosystem.
That's the impression. And the video finishes on a pretty optimistic note for Europe, actually.
Oh, how so?
It suggests that if Europe could adopt and adapt some of these elements, fostering deeper capital markets, encouraging participation, it could become a much stronger global competitor, especially because it already has those strong social welfare systems as a base.
Combine the economic dynamism with the social safety net.
That seems to be the potential upside highlighted.
Okay, so wrapping up this deep dive, Sweden really stands out, doesn't it? A European country, not huge, but with this incredibly high individual investment, a buzzing IPO scene.
Yeah, driven by smart policies, yes, but also rooted in history, culture, and that supportive social structure.
It's just operating differently than many of its larger neighbors on the continent.
Absolutely. The key things for you, the listener, to take away are probably that potent mix. Lots of ordinary people actively investing, government rules that really nudge people towards saving, and businesses towards growth, a culture that's okay with calculated risk because there's a safety net, and this long-term view on building businesses.
Not just quick flips or exits.
Exactly.
Okay, so here's a final thought to chew on. Could bits of this Swedish approach work elsewhere, maybe where you live? What do you think are the biggest challenges to creating that kind of broad investment culture and innovation engine? And how do you get that balance right, encouraging risk, but also providing security? Definitely some interesting food for thought there.